And welcome aboard. Thank you for joining Trading Buddies on this Thursday, the 9th of February, would you believe? Oh, something weird happening here. Not sure what it is, but let me see if I can fix it. Sorry, this control panel just throws me out every single time. Okay, I'm going to share screen, I hope. Or am I already sharing screen? Goodness knows. Share screen, there we go, share. Oh, that could be timely. That's Euro Kiwi, very, very close to our TP1. Let's see if it can hit it live on the show. That would be good. Gold. I'll just stay here for a second, see if we can hit that TP1. Those of you in Euro Kiwi, a little bit further. Go on, you can do it. 55.9. We need 58 pips to hit TP. And those of you who are not in the Telegram group may not be in this, but it refuses to go there. All right, I can't dilly-dally here. That's another story altogether. Let's go with gold. 7, 3, 4, 5. Go on. Go on. You can do it. We won't hang around, guys. Let's go to gold. There we go. Awesome. Right, Euro Kiwi's under control. Let's go to gold. For those of you who've got no idea what I'm talking about with Euro Kiwi, I'll go back and have a look at that shortly. I don't see the people waiting in the room. Let me see if I can find them. There we go. Okay. Sorry, guys. Producing and talking and trading at the same time, sometimes very difficult. Right, gold. Let's talk about breakout. Hasn't had a good week, I don't think. I know I had a loser on Monday. I haven't traded since then, but it doesn't look too flash, I've got to say, because very, very range bound. Actually, gold is amazing. You can see a bear flag sitting there. You can see that bear flag very clearly. You can see a channel there, surely. There's not a lot you can't see, to be fair. And you can see a horizontal level. There's a whole lot going on with gold here in terms of the best trade line you'd ever see. Man, look at that. Perfect. Gap, 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 gap. Separation is absolutely superb. Something is going to happen at this trade line. Hi, Paul P. Something's going to happen. And I don't know what that is. My bias is for downside, of course, with gold. Why? Still there. Double top still there. Look at that massive game changer bar on the weekly chart last week. Amazing. Off a double top. I've got to be thinking downside for gold. Anyway, that's not today. Today is, let's see if we can trade a breakout. Hourly charts, we've got a range from, wow, okay, that's the 2 o'clock candle. That's the 3 o'clock candle. All right, so that's the bottom of the range, clearly. And the top of the range is also clear. Pretty big today, that's okay. 100 odd pips. I'd like to be sitting here, to be fair, and not here, trading straight into DR1. And I think that's happened a couple of times this week, actually, where you're trading straight into the resistance levels and bang, comes back, takes you out. That's where we probably need to be thinking about filters with this particular strategy, right? We're not at the moment, we're not adding filters. We're just trading it as it falls. And now we have the Open of London session. Let's do it. So the high of that bar is at 1882.06. We'll go one up from there. So it's 1883 will be the entry. Now, those of you who are in the room for the first time, and thank you for coming in. It's lovely to have you here, but this is a test trade system, right? It is not something that we have proven. So I'm suggesting to you that you look at it, follow it, fine, see if it works. If you need to trade it, if you're absolutely desperate to trade it, it has to be at absolutely minimal risk because it's not proven, right? So it's a buy stop at, now I forget the level, 1883, I believe it was. All of that said, 1883. I'll explain to you, because I do see some new faces in the room today, which is great. I'll explain to you exactly what we're looking for very, very shortly. Bottom of the range is the low of that candle, 1871. 1871. It looks like I've missed the entry here. That's okay. I won't place this order now. I'll wait till it comes back. Maybe that's a good thing. We might have escaped. I don't know. We'll see. If it comes back down into here, I'll replace the order. But we have missed the entry there. Once that's missed, I simply move on to the next one. This is a wonderful thing about the balance. It's kind of a teeter-totter. FOLO on this side, FOMO on this side. Fear of losing, fear of missing out. Fear of missing out is probably the most dangerous of the two, but there is a wonderful teeter-totter in there somewhere that we need to control, and it's based on our personality. And I'm not going into a psychological exercise here, but I'll just leave it at that for now. I don't care if I miss out because there's another one just around the track, right? There's another one tomorrow. There's another one the next day. There's another one the next hour somewhere on our chart. So FOMO doesn't bother me at all. FOLO is my Achilles heel in trading. And we all have one. We all have one, trust me. So I don't care if I miss this, but I'll revisit it if we get a pullback. Okay, that's what I'm waiting for now. Righto, let's update the week thus far. We have a weekly order on Aussie yen. Why? I'll have to go tighter. You can't see it. It's because, well, two things really. And those of you who understand the way I trade, when I see, and I know that's few, when I see this, three amigos, I call them, and what they're representing is the false breakout of a range. That range there, it's not super great, the range, to be fair, but it's there. False break to the high side, false break to the high side, false break to the high side. Now, the key point about this is when you get new high, new high. So essentially you've got something like that. Doesn't need to be a channel, doesn't need to be a trade line. All it needs to be is a higher high that is also a false break of the range. So it comes back into the range, goes to the bottom, back into the range, goes to the bottom. I expect 95% of the time when I see that this range is going to break to the downside. Now it's done that. As it does, it goes to a support level, which is where you need, if you're trading that, you need to take profit at the support level, as always. And then one of two things is going to happen. Surprise, surprise. We're either going to go and meet here, or, in my opinion, we're going to come back into this range and test the top of it again, or we're going to create a new high. So that's what I'm counting on right now with this particular scenario. So we've hit the support level, we come back inside the range, and we've retested the bottom of the range and that support trade line. So my thought process is, if price comes back to here, it's going to here, top of the range, or it's going to challenge the high, in which case we win some money. If we only hit this level, then, okay, it's not a big deal. We get safe in the market and we get a break-even trade. That's the worst thing that can happen if we hit this level. And that's exactly why I'm trading it. So Has anything happened this week on that trade? No, nothing, absolutely nothing. So Aussie yen is absolutely in flux, doing zero. I'll continue to hold, however, because when I take a weekly trade, I hold it till the end of the week. Now, what does that mean? It means even Saturday morning for me, I'll get up maybe at, depends on what sort of Friday night I've had, to be honest, but I'll probably get up about 7 a.m. and the market closes at 9 a.m. for me. So at 7 a.m. I'll make a decision and I'll go, okay, we're in profit, haven't hit TP1, so I'll move stop to entry just to protect that position. Or if we're in drawdown, depends on how much drawdown, I'll make a decision based on that. It will probably be that I'll leave the drawdown situation in the market over the weekend. But I want to be safe if I'm in profit with a non-TP1, an entry that's given us profit but not hit our TP1. So that's what I'll do with that one. The one I'm super keen on is CAD Swiss. Now, CAD Swiss has done exactly the opposite of what I would like to see in terms of a breakout, right? We're looking to trade this as a breakout, but as always, the very best way to trade long is off support, not off resistance. So what we've got here is probably a better setup than I could have anticipated at this point in time. We've got a break. Let me go back to there. Right. So here's the support trade line. We've now got a break below that, not on the daily chart, but on the 4-hour chart. Yes, we do. So we've got the break. We've got a little bit of consolidation, and now we've got thought process going on from the market. Best case scenario here is if price were to go up, hit the daily pivot, even close above the daily pivot, even better, then come back and retest the trade line and fail to go below it, or even fail to go below. If I were to pick this up here, it'd be fantastic. But here would be the best entry if what I've just described happens. So break the daily pivot, come back and retest the trade line or the horizontal level. Either way, I'm fine. And look for an entry there. That's the safest way to go, in my opinion. Put your stop loss under the lows, get some profit in the bank. Monthly pivot's not an issue right now. Why? Because it's been broken. It's not an issue. If it was untested, then it's an issue. Daily pivot's an issue because it's untested. So it's likely to provide some resistance to price. And that's why I'd be looking for that to happen. Higher risk, you could put your entry there. Lower risk, put your entry there. That's what I'm looking for on CAD Swiss. And I'm still super keen to trade that. I don't know what's happened news-wise throughout the week because I haven't been following it, but this is exactly what I'm looking for. Up to there somewhere. Right, let's go back to the one we just got profit on, which was Euro Kiwi. Now, Euro Kiwi, if I can get rid of that off my chart now. Euro Kiwi, traded that this morning, and those of you in the Telegram group would have been aware of this. This could have been very early in the piece, but what I was looking for was a false break of this trade line here. Now, when I say it was early, I didn't have the rally that I like to see before I go and trade a lower high. So really, this is not a lower high for me, but it was giving me fair warning that it's going to be a false break. Not really of that trade line, but of this one. So we broke it. One candle only of consolidation, if you can call it that. It's probably reversal, but it's coming off the top of our broadening price pattern, which I flagged early in the week, right? And then we got to bounce off the daily pivot. Couldn't go above that level. And that beautiful green candle, which is what I love to trade short, right? Once it's bounced, failed to go higher, entry there, stop loss there. Love to trade it. I would much prefer to have seen it up here, to be honest. And that's why I said it could be early, but the potential reward here is substantial, and that's why I took it. So that one's okay. That's gone through TP1. Euro dollar because it's ranging very, very nicely. When I say ranging very nicely, people say, well, what's nice about a range? Well, there's some wonderful things about a range that are nice. You just got to identify them and trade off them, which is pretty much going back to Euro Kiwi, right? We spoke about this earlier in the week, where we've got the top of this broadening price pattern at a horizontal level. That's where I start to look for downside. And the first thing I'm looking for is a lower high. As I said, I didn't get it perfectly, but it may well play out well. So if I go back to euro dollar, what have I got? Well, the bigger picture is telling me we're at the bottom of a range, right? A range for me is any shape or form. Doesn't matter if it's a horizontal level, rectangle, triangle, don't care what it is, as long as I can see something that's uniform. And the uniformity here is top to bottom, bottom to top, et cetera, et cetera, et cetera. It keeps doing it. And whilst ever it keeps doing it, then I'll keep trying to play that until it stops doing it. Now, right now, we've got euro dollar, and this is the range I was talking about. 4-hour chart, doing absolutely nothing here. How would you pick a direction here? Well, we've already picked the direction, right? The direction's saying that way. All we need now is a confirmation that we've got an entry. And at the moment, no, I don't, but upcoming, I've got this scenario. So I've got a monthly pivot, which is really hugging price, or price hugging the monthly pivot. I need to see this break above it, come back and retest it. And then I'm off to the races, I believe, anyway. The only thing that concerns me about that is this chart, which is, if I can find it, the dollar index. And again, and this is obviously the almost reverse of the dollar index, is hugging the monthly pivot, right? Now, what I do see here is upside for the dollar index, or do I? That level there is kind of giving me two thought processes. I can see this level, and I saw that early in the week, and I thought, well, okay, price is going to here or here before I start to look for shorts, not necessarily shorts on the dollar index, but buying on the euro, the Aussie, the Kiwi, and the pound versus the dollar. So this criteria has not been fulfilled, and that concerns me a little bit. But when I look at that horizontal level, maybe I've got this pegged wrong. Maybe this is going to come back here before it hits that level. So therefore, I think this is still a possibility. So I'm looking for euro dollar long, up here, back here, ideal. That's the way I'd like to trade it. I think I've got a whole bunch of other things that I'm looking at, but I think they're the most pressing. And if you can find a way on euro dollar long, then I think you're on the right track short term. We've had the daily pivot test. We've had a retest. That's out of our control now. Well, it's always out of our control, right? But it's off our watch list. It's no longer a criteria that we need to be concerned about. But that's also suggesting to me break, retest. Even that looks like a bit of an entry up to here somewhere. So I'm keen on euro dollar long, and the other three I've just mentioned are also on my watch list, very, very much so. So I'm going to bring in Ash. Hello, buddy. Can't hear you, mate.
There you go, buddy. So I was muted just to make sure that I wasn't going to distract you.
You didn't distract me. All good. How you going?
Yeah, going well, mate. Going well. I am interesting to hear you say that you're looking at quite a lot of things, because that is probably the reason that I am struggling to find anything that I like.
Yep.
It's just yeah, just kind of one of those periods where, as you quite rightly point out, the range seems to be the king at this stage, and it's, you know, it's just quite difficult to find some stuff. And I've got a few things that we can talk about, but no trades that I like at this stage. But there's a couple of ideas that I've got, and there's a couple of things that I am watching out for. So I'll bring that in.
Yeah, it's really pay attention time for me because of those ranges. So I really need to be in front of the charts. Sadly, I won't be in 45 minutes. That'll be the end of me. But I can definitely see some opportunities.
Oh, I hope it won't be the end of you, mate. I mean, extreme.
Well, you know, you know what I mean.
I do. So the Nasdaq is one of interest for me. You know, the Nasdaq has been on a bit of a tear. Ever since the turn of the year, it's doing very, very well, and I'm really interested in this area to try and get in on the short side. But
yeah, me too, mate.
Yeah, there's a couple of reasons where, a couple of things that suggest that we could actually go a little bit higher, and I'm really watching this level up here, which is another 1,000 pips to the upside. Do I think it's going to get there? I do. But I'm just looking to see whether there's going to be a retracement first. We really haven't tested anything. We haven't tested this area here, and we haven't even tested this high here as yet. We've got close, but we haven't got down to this point here, and I think that would be a genuine target for the Nasdaq. As we've opened up this morning, we've just managed to kind of clear this daily pivot, which does suggest that there could be a little bit more upside in the offing before we start to decline. So then I'm starting to go, okay, well, where's the area that we could decline from? If it's not this daily pivot, then I'm just looking around, and I see that there's a little level along here, and you can probably see it better when we bring in the hourly. There was this point here, so that's the area. There's a few touches along that point there, almost a touch there. So this might even hug down a little bit, but it's somewhere in this area. So going to be looking at the Nasdaq in around about 100 pips. So for some downside, and you can see that there's a horizontal line which should coincide with it, depending on what time it manages to kind of get to that level there. But as I say, I think a little bit of upside first. There is jobs data today, and the jobs data is probably going to be on the minds of investors. And because the Nasdaq's in an uptrend, it may well rally into the jobs data, and then we might have to rely on the number to push us down. So it could be a little bit of a difficult one. So price action in this area is going to be interesting. If we get there first, jobs data is not going to be reported for another 5 hours. So if we get up here first, then I will take the trade if we're before the jobs data, because I will then anticipate a fade into it rather than a rally into it. But if it's up here by jobs data time, got to wait for the number to come out and then see if there's a short on. And if there is, there's lots and lots of room. So it won't matter that there's, you know, it could be a huge old bar, really, which I doubt it will be, but it could be a decent sized bar and still give us an opportunity to short this. But yeah, I'm just waiting to see this price. I'm waiting for that price before I do anything. I guess the question is, why not trade up into that price? But the reason that I'm not that keen on that is that I'm looking for downside, and it may not get there. You know, we've cleared the daily pivot on the 15, but we haven't on the hourly. So if it does decide to reverse and see this weekly pivot before it rallies again, then I could be caught in a trade I really don't want to be in. So well, I'm not going to do that. I'm going to leave it and see if I can find this price up here and then take the short. We've had CPI data from Germany this morning, which came in slightly better than expected on the year-on-year basis, 9.2%, still crazy high, off a level previous of 9.6 and a forecast of 10%. Month over month, it came in at 0.5%, and the forecast was at 1.2%, and the previous was negative 1.2%. So interestingly, the inflation is still kicking up. There's no disinflation on a month-by-month basis in Germany. Yes, the inflation level is slowing by the looks of that, but there's not disinflation. So I think the numbers are suggesting that there's going to be a difficult path ahead. And what's interesting to me about that is that what we've basically had is rallies off Jerome Powell saying that he recognizes disinflation, and also saying that he believes that rates will stay higher for longer. So that the Nasdaq and the S&P still managed to rally off the back of that, which I find a little bit perverse, and I don't know why investors are so confident that there will be this pivot when it is going to be about the whole picture. Yes, the inflation data in the US it has come down a lot, but the rate of inflation has come down a lot. But it's about this jobs market, and because we got jobs numbers today, that would suggest to me if we get a continuation of the trend in the jobs market data, then this market is coming down. The caveat to that is that we've had the likes of Google, Apple, Amazon, Microsoft, and now Disney all saying that they are slashing jobs. When is that going to filter through to the macro picture? Now, of course, the tech sector only makes up about 2% of the jobs in the United States. So it might well be that it's a drop in the ocean, those companies reducing jobs, and we don't really see that coming through. And the other sectors are actually still hiring. So, again, that might be the reason that we're getting the picture that we're getting. So there's a little bit of of uncertainty, which is maybe why the market's rallying. Maybe it's waiting for those those companies that have reported lower jobs or a reduction of jobs. Maybe the market is waiting for those to filter through and then see the jobs market turn on a big picture basis, and then it will have confidence that this market will continue to rally, because Jerome Powell has stated that it's the jobs data which is really holding the Fed in position. So interesting day today, mate. But as I say, it's 5 hours before that. We got economic forecasts from the European zone, the Eurozone as well, and the EU summit. So that might well push things around a little bit. The dollar has managed, as you pointed out, to find a base. It's managed to kind of get itself a base down here and have a really, really juicy move to the upside. It could probably do with some retracement. We did discuss the dollar on Monday with David, and we were sort of saying that that the pound dollar was probably not the safest thing to short because of where it was, and we pointed out this line along here. Now it's rallied along this level, and it's had a decent bounce, but as soon as it gets up here, the shorts are on.
Yeah, it's a different story.
Yeah, I mean, we've had GDP data from the United Kingdom this week, and it came in at 0. So just sneaking away from a technical recession, but PMIs are weak. There's lots of data which suggests that there is weakness that is going to flow through the economy, and that GDP data, I would have thought within the next quarter and the following one would suggest that we are in recession, because it's just been ebbing away over the last 12 months. But it's not there yet. But that does suggest
it's actually crazy, don't you think, that everyone has been going recession, and it's the numbers still haven't ticked over, if you like.
Yeah.
It's kind of crazy.
I agree. I totally agree. We are seeing misses on earnings, and again, this is the sort of the micro picture is sort of like the single companies, and single companies or individual companies is probably a better way to put it. Are reporting misses. They're reporting a lot of misses of earnings. It's a mixed picture. The likes of Uber actually released some pretty good numbers yesterday, but Disney, Apple, Google, Microsoft, all the ones that mentioned earlier on have reported a reduction of their on their balance sheet of profit. So that eventually will filter through to GDP. And now in the United States, they seem relatively robust, it has to be said, but the United Kingdom isn't. AstraZeneca reported today, and they're talking about double-digit growth in with AstraZeneca. They've a cancer drug, and obviously COVID really helped in 2022 and 2021, but now we're
actually we've just been offered another one, another COVID injection.
Yeah, well, that'll continue now, mate.
Have you guys? Yeah.
Yeah, I mean they're always being offered over here. The
okay.
COVID. Yeah, there's the amount of COVID injections that are offered. I mean, I ended up taking the first bout just so I could travel. But I've got to be honest, mate. The COVID in this country, whether it's not been reported or whether it has genuinely weakened, is I suppose questionable. But COVID, the way it's being portrayed right now, seems to have weakened its strength. And I had COVID, and it was all right. It was uncomfortable, but it wasn't brutal. So if it is basically a really, really bad cold, then I'm happy.
It depends on your demographic, really, doesn't it? At the end of the day,
I think you're right.
As to the protection that you need to consider.
Yes.
Yeah, you're a young buck, no problems. My old bones need to consider that. Okay, yeah. It can knock me out. So
absolutely right, mate.
I need to be lining up for those injections, and that's a personal decision. I mean, everybody's different,
No, but I would be the same as you. There's no question, and you'd probably be the same as me. It's one of those, isn't it? It does depend on your demographic, and I don't feel at this stage that I'm at too much risk. So I would be quite happy not to have it, but that's and that's a lot of people, in this country, my age and younger, and that suggests that COVID probably won't boost AstraZeneca's profits, the COVID injections, quite as much as it did the first time round.
Yeah.
But they do have a diabetes injection and apparently a breakthrough cancer injection as well, or cancer treatment as well, which could do away with chemotherapy. So they are in a really good space, AstraZeneca. And you can always rely on health. The question always is, are they overvalued? But they're talking about double-digit growth again this year, and that suggests that they're not. That does push the FTSE 100 up, because the FTSE AstraZeneca is the biggest company in the FTSE 100. Let me see if that's correct at the time. No, it's not. Sorry, it's second. Shell is top, but they flip-flop. So 1.7 billion market cap for Shell and 1.65 billion for AstraZeneca, and they do flip-flop. So
they've reported, haven't they? Has Shell reported? I think it was BP reported.
Yes.
Record profits, right?
Record profits, mate. Yeah, and they are. I mean, the push in BP has been astonishing, really, over the last 12 months. Is that
the story of the FTSE? Is that why we're challenging all-time highs, or we've got above
it?
You're back underneath them yet? Yeah.
Yeah, that is the story of the FTSE. We are just pushing towards the all-time high.
Still going again. Wow.
Yeah.
Okay.
Yeah. So it's in good shape, the FTSE 100 right now, and there. I mean, to be honest, it's been a long time coming, and interesting when when we talk about the FTSE 100 as all-time highs. If you put a level across here, this is back in 2018. So if you compare what's been going on with the FTSE, let's have a look at this. This band here. In the last 10 years, the FTSE has not even doubled in price. It's up by what would that be? 5. So it's up by around about 60% in the last 5 years, in the last 10 years, which is respectable. And I say respectable because if you compare that to the Nasdaq, the Nasdaq is up by about. I mean, we're talking like almost 700%. I mean, it's like, it's a crazy amount that the Nasdaq has gained in that same period. You look at the S&P, very similar. S&P down here was at 1,000. It's now at 4, so it's up 4x.
I mean, that becomes a simple thought process, doesn't it? Really, at the end of the day.
Yeah.
What happens when something goes up?
Yes.
It's going to come down.
It is going to come down. I think the interesting thing about the dynamic between the European stocks and the US stocks is that particularly the Nasdaq. The Nasdaq's all about growth, and there isn't any growth. And the FTSE 100 is all about cyclicality. And because we are, coming back online after COVID, then the cyclicality is obviously picking up. People are getting a lot more active. China is reopening. We saw Saudi Aramco saying that they are raising prices in China because the demand is really picking up. And I had a little bit of a question about that. I thought after Chinese New Year we might get a different tone from China, and they may well close down again. They haven't done that. That does play into the expansion sectors, like oil, like metals, industrial metals. So the likes of Glencore and BP Glencore, BP, Shell, and Anglo America. These are all companies on the FTSE 100. So the FTSE 100 is just seeing investors move probably their money from the United States over to the United Kingdom. And if you consider the exchange rate as well, that also boosts the desire to buy FTSE 100 companies. But as I say, it's been an underperformer for the last 10 years. DAX, this is the DAX over the last 10 years.
Yeah, sorry, when you were talking about the Nasdaq and the S&P,
yeah.
And I said, when it goes up like that, it's going to come down. That's exactly, I was talking about those two instruments, not the FTSE.
Yes.
And that's an interesting comparison you're talking about. And that could be a diametric polar opposite, frankly, from the way you're going. The FTSE still could keep going, whereas the S&P and the Nasdaq and the Dow could come down.
Well, do you know what the only reason that may not happen, and this is the DAX, which is up 3x as well. So we're talking about this is the CAC which during the same period has also actually it's performed quite similar to the FTSE, but we have had a breakout. But the reason why that theory may not hold is because the Nasdaq holds companies that are disinflationary, i.e. they are tech companies, which do reduce the cost of stuff. They reduce the cost of work, they reduce the cost of labor, and that would suggest that companies that are in the FTSE and companies that are in the Dow and companies that are in the DAX will be using technology to improve their spend. So this is where the Nasdaq will probably end up doing something similar over the next 20 years. It might not have quite the growth, but it will do something similar because I think it holds the companies of the future more than the FTSE 100 does. Yes, the FTSE 100 has got commodities and stuff, but there's energy companies that you would think over the next period of over the next decade they may well be wiped out. Maybe in the next 2 decades, the likes of Shell and BP,
they'll still be there.
They'll still be there, but they probably won't be quite as important. Oil has been
unless they diversify, right? Unless they get into renewables, blah blah blah.
Yes, which they are, but they won't have quite the hop on the market that they had with oil.
Because the competitors, yes, they haven't got the duopoly. Whoa, I'll get that out. Duopoly, if you like.
Yes.
Yeah. Interesting. Yeah. Okay.
So there's things to consider there. We should also talk about gold, because gold has obviously gold at a you can't see it so much on the monthly, but you can see it on the daily. Big push to the downside on gold as we saw the NFP numbers come out. Really quite positively. And that pushed 10-year yields up and it pushed gold down. So this is also a dollar story, but look at that. Monthly pivot, weekly pivot, horizontal level here, or certainly a previous level of support. That looks like a really interesting place to look for selling opportunities with gold.
Little bear flag. If you have a look at the weekly chart, is that the weekly? Yes, it is.
This is the weekly, and what you were saying about when things go up, they have to come down, or they tend to. That would suggest that with something like gold, it's probably more likely to come down.
Now, if that's not a double top, lower high game changer bar, I'm not here.
Well, this is what we've been talking about for the last ever since this double top was in.
We've been waiting for that lower high forever, and I think maybe we're looking at it.
this is a year in the making. You know, we thought this would be it, and it would be not necessarily curtains for gold. You called this a long time ago, and there were opportunities right the way along here to trade gold down here at that horizontal level. It came down, but it surprisingly, in my opinion, has not really played this particular M topping pattern out. When you sort of like think about this,
it's chunky now. Yeah,
it's chunky. Yeah, well, this was the M topping pattern here, where as it came up and down and up and down, and when it went through at this point, it looked like
here we
the
go.
level between that
here
point
comes
and
1200.
Yeah, exactly. I mean, that's what you're kind of looking at for this to then come down significantly to, as you say, down to the 1200 level. Well, as I say, that hasn't had a chance to happen. I can't get that to work out for me now, but it hasn't had a chance to happen. Let me redraw this. So it was up and it was down and it was up and it was down. Now that, as I say, this looked like the signal that we broken through, and it's pretty clear. You know, it was an amazing signal, really. And what maybe the sad thing was, as we broke back into the range again, we didn't get the pullback we needed. Maybe we could have traded this bar here. I think Ainsley did actually. And she's had a pretty good run.
And you got the likes of these bloody gold bulls who come in every November and December and push the market up. They make $1 squillion, but they're pricks. They get in the way.
Well, this is the breakout point down there, mate. As you say, 12,000, around about 13,000, something like that. Now, what's 1,200, sorry, or maybe 13. So in this area down here, sort of like between the points here, it was just under. So it's about there. Now, if we have a look at what that would look like on the longer term time frames, it sort of makes sense. You know, might even be a little bit higher, but it would make sense that this range could well be tested, because it hasn't been. You know, it just took off. It sort of makes sense that could happen. But whether it does now, you know, it's very, very difficult to ascertain, because the pattern's really been has been broken, and it's not on anymore. You know, that pattern's not on anymore. But what is interesting is that we are at the end of the seasonal pattern in gold long. You know, we're a week away from that. We're a week away from the seasonal pattern in the Nasdaq long as well. You know, the Nasdaq tends to come down around about mid-February, and we might be sort of heading for that. So, you know, this Nasdaq is pushing exactly where we need it to at this stage. Yeah, it's got a little ways to go, mate, but it's, you know, it seems to be quite keen to get up, the Nasdaq, at this stage, you know. But it has been, you know, similar, really, actually very similar pattern to gold in some respects, where you do have this M topping pattern, or it certainly looks like it, where we got that with a slope of this right M. You know, that would suggest that that there could be some downside coming.
Yeah, it's a classic descending triangle as well.
Yeah, yeah, which is actually quite bullish, you know, in a way, you know. So I suppose we are kind of getting mixed signals, but that would drive that one down to around about the 12,000 mark, which puts it down to test here. That's what the pattern would do if it's coming down. It looks a lot cleaner on the daily when you look down here. It's kind of
that cycle's just completed.
This one?
You talk about, well, it's a W. You know, it's the reverse, isn't it? The W is just
yes. I hadn't even spotted that one, mate. Yeah, interesting you say that, because and it's interesting where our eyes go, because what the pattern that I've been looking at is for this inverted head and shoulders, which is here.
Yeah, I can see that.
Which brings us down to the, you know, at some point. You know, brings us down to here at some point, but you know, not in the near term necessarily, more in the medium term, a couple of months away. But that would drag us up to that high again. But you're absolutely right. There is a W down here, and this is also completed as we come like this. Now, interesting about this. Now let's see if that would drag that up there. I don't know if it would or not.
Again, no retest of the neckline.
Well, that takes us slightly beyond. No retest of this neckline here.
No,
Oh, you mean
the real, yeah, that one, yeah.
Exactly, and that is why I think the Nasdaq has got a pretty good shout of coming down, because of this in place. However, you know, my fundamental reading is that the equities should be weakening, but the market is doing that thing that it often does, where it completely confounds the information and decides to rally. Now that could be a trap. You know, it could,
I think
quite easily.
Exactly. I think that's a short-term anomaly.
Yeah.
But if you think about anomalies are there for a reason, and they're not there for a reason. They occur for a reason. And the reason is generally because somebody's got an interest in taking or gaining liquidity from somewhere.
Yes.
And I think that's probably what's going on there at the moment.
Yeah, exactly, mate. But because, you know, these institutes have to get out of long positions, and they're not going to get out up here. So what they do is they buy the market up here, make some, you know, take some profit on the way. And, you know, let's say, as an example, they have long positions on the Nasdaq. I mean, there's going to be some up here, of course, but let's say they've got long positions on the Nasdaq in this area here. So they buy it down here, and then they can push that market up to around about the midpoint, which is probably is somewhere around about there. That's probably around about the midpoint. Let's just see if that's right. No, it's not. It's a bit lower than that, actually.
Yeah, I think ultimately we get to that level, but at the moment, I think that inside W is complete. So I think we're in a sell zone right now.
Yeah. In fact, let's do this properly.
Back to that neckline, then it can go again, I reckon.
Actually, we're right on top of it, mate. This is 50% retracement where we are now. So this would be, you know, anybody that's long, and there would be, because you look along here, so there's long positions here. So any of those institutes that want to get out of the positions, they buy it here, take their profit, close these longer positions so they're totally flat. Everybody else is left holding the baby, and down we come. So so it is possible now that the next one from there, the 50% brings us right onto this level.
Yep, makes sense.
Yeah, so that would mean buy here, then you can close your long positions when you get to that point there. So couple of levels in the market, mate. I'm going to give it a go here, and if it comes down, great. If not, then that's the next target at 13.6. Well, it's around about the 13.500 area for the Nasdaq.
Yeah, look, I mark that as a distinct possibility. What's that level on the, what is it, 32 mark with your fib?
This one here?
No, that's the 50, isn't it?
That's the 38.2. This is 50.
So the 21.
The 61.8?
No, the 20, what is it, 21? The next one down?
Oh, 23.6. Yeah.
That's the one?
Yeah. That's the one, yeah.
That's where you're buying. That's where you're looking to buy, I reckon.
Well, you know, have a look at it this way round, because if we actually sort of like look at this on a fib retracement, that would be the other way, of course, and we go to that point. This is the 38.2%, exactly the same place, 38.2% retracement. And I think what's interesting, this level is it's 12,000. It's just a nice round number as well.
Perfect.
Yeah,
right.
Lots of support there, mate.
Little black book.
But write that down. But you know what's interesting? When you look at this fib and you go right at the lowest point in the bar to where we've been so far on the run, this is 23.6, and it hasn't even retraced to 23.6, or you know, after this explosive move to the upside. And it has been relatively parabolic when you look at that. So we haven't even done that, which is another reason that I would question the momentum and the power that this still holds to be able to break through that level without doing something, you know, that coming back a little bit. So another case for me that the Nasdaq needs to come off. The numbers need to back that up. And as I say, I'm happy to take the market short before the numbers are released, and then see if it can push down a little bit to see if I've got a little bit of safety when the numbers are released. But if not, then we wait for the numbers and see if they do actually back up the theory. And if they don't, then we'll wait for the next one. And if it crashes through this level, then we're waiting for numbers up here. But we are talking about a Nasdaq which is 5 days away from its seasonal high for this particular period. We're talking about a US stock market which is 5 days away from receiving CPI data. Now, CPI data has to, again, it's got to back up the theory. It's got to be flat or positive for the Nasdaq to come down, probably. But we are talking about a few things which coincide with a potential time period that the Nasdaq could well weaken. So I think looking for shorts in this area makes sense to me. And then if they don't happen there, then you're looking at the next one. Because the bottom line with all this is that the US economy has done very, very well in its recovery so far off these high inflation numbers. But I believe, Jerome Powell, that there's still a long way to go. Just because it's come down from 10 to 6 or 10 to just over 6, it doesn't mean it's going to then take another jump down to 2. Within the next sort of 12 months. So I think that we're much more likely to stay elevated for a while as those first and the initial causes of inflation start to filter out a little bit. But the jobs numbers is the next aspect of it, and those jobs numbers need to ease, and so far they're not. So that
we're still really early days with those numbers as well. That those prints, we've gone off one print. Okay, there's a bunch of one prints. I get that.
Yeah.
But really, it's only one print in that direction from a whole bunch of indicators like PMIs, etc., etc.
Yeah.
I think they need to be confirmed. It's just like everything coming off the top, if you like. You need that lower high, right?
Yes.
You need to have that confirmed that those numbers are genuinely coming down in a trend, if you want,
yes.
rather than a single digit or a single read. And I think that's what we need to see, and I think that's what the market needs to see as well.
Yeah, well, yeah. I mean, certainly, speculators on the Nasdaq don't seem to need to see anything. They're just quite happy to buy the thing. It's just
that's cool. I'll mark them wrong.
Yeah.
and look, really, at the end of the day, all that's doing is providing a good selling opportunity, in my opinion, anyway.
Yeah.
Because this is not over by a long shot, by any stretch of the imagination. I mean, the inflation and the interest rates really have been a distraction on the massive amount of liquidity that has been pumped into the market by the governments and central banks. Reckless, absolutely reckless pumping of money into the economy. And they'll say, okay, well, we needed to keep the country ticking over. And, there's a good argument for that. I can't argue against it. But I think it was far too much, far too quick. And that's why bubble. This bubble's been going all over the place. Yeah. And once they get to the point where, okay, they have to burst. And they don't just burst for a short time. They come back a long, long way. And I think, history will tell you that. It's not a matter of a 20% or a 30% retracement. It's a matter of, okay, we've got to reset. At the end of the day, I don't think we've seen that reset yet.
No, do you know, I think that's a really interesting point. And actually, I think that's what, when we consider the Nasdaq, because because it has been on such an unbelievable tear for 10 years, the expectation is that we're always going to get these kind of V-shaped bounce backs. Every time we come down, we just boing back up again and we're off. But at some point, it's going to catch itself into a range, and You know, you look at this on the monthly, and we're right on top of this level as well. It's going to catch itself into a range, and it will stay here for a while as things get, you know, sorted out, and it just bubbles around here. And yeah, okay, eventually it may well go higher, but the kind of the concept that it's just going to, you know, constantly do this, where it doesn't matter how far it comes down, it's just going to do that every single time, which it does. You know, there we got one here, we got one here, we got one here. You know, there's hardly any points where the Nasdaq has rested to consolidate and say, actually, economically, we're going to be here for a while. You know, and this is mainly because interest rates have been at zero since 2008, and this is what we're talking about. 2009. This is the 2009, you know, post 2009 crash to where we are.
So
and we're talking about
free money and government money on the back of COVID, right?
Yeah.
So there's been no risk. There's absolutely been no risk in the market at all for 10 years.
No.
Now,
exactly.
now suddenly we've got a risk on or risk off situation, and we've got a bear market. And this is don't be fooled. In my opinion, this is a long way from being a bull market. We're still in a bear market, and I think every single opportunity we've got to sell this market, we ought to do it. Look, I will be. I'll be looking for that.
You're right, and if you look at it on a monthly, which is obviously kind of like the king time frame, this is a downtrend. You know, we got lower lows here. We got this kind of support level here, right there. It was bashed through. Then it comes up, creates that lower high there, comes through again, bit of a support there, but it crashes through, creates another lower high there, comes down. Which point are we going to create the lower high? Is it here? Well, it might well be. No, I don't know if it comes through that. Yeah. Well, this is the pre-COVID high, and that was always the price that I thought was the most interesting. We're not looking like we're getting anywhere near that yet, but we're looking at a monthly chart. This could actually take another 12 months easily before we get down to that point. Of course, at that point, you might see Jerome Powell pivot and switch what he's doing, but companies are getting hurt. You know, we are now starting to see for the first time in many years, really, companies reporting a reduction of profits, and you know, talking about, you know, a layoff as well.
I mean, that's why the unemployment rate is just ridiculously low.
Yeah,
because there are no jobs. Sorry, there's jobs around, but you've got a situation where all of these people being laid off by companies who are struggling. How does that work in the end? Those companies will either go under or they won't, and then we'll have a situation where what happens? We've got full employment now. The employment market's so tight. How is that working? To me, that's a bit of an anomaly. Yeah, explain that to me.
Well, the only real explanation that I've got is what's interesting about those jobs is the average earnings are reducing. So that suggests that either, you know, people are being held within their jobs, but they're not getting paid more. Some may be being paid less. I doubt that, but they're probably getting less hours, which means they're probably doing a lot of job
real wages are decreasing by 7-8%.
Yeah.
If they're not getting wage rises, right?
Yeah, yeah.
So, and that's where it becomes really interesting, because this inflation thing, which is going to bite harder than we've even thought about right now, I believe, because especially in terms of housing, where you've got mortgage stress hasn't even hit the sides yet, because you've got a lot of people who are facing a situation where, and because of house prices, you know, their borrowing is not $100,000 or $50,000 or $200,000 or $500,000. Some people have got $1 million mortgages and $1 million plus, right?
Yeah.
And interest rates locked at, let's say it's got a 2 in front of it, 2%. If you've got two good jobs, you know, earning, I don't know, $100,000 a year each, you can afford the repayments on that. But when it goes from 2%, where you've locked in a fixed term maybe 2 years ago. Suddenly, as they come out of those fixed interest rates, it hasn't got a 2 in front of it, it's got a 5 in front of it.
Exactly.
Which means that their, I don't know what their repayments would even be on $500,000. It'd be, I don't know, what, $2,000, $5,000 a month. I've got no idea what it is.
Yeah, I would have thought it'd be somewhere in that region. Yeah, so it'd be probably like 2,000 a month if you're repaying as well as not just the interest.
Yeah. Well, suddenly let's say that's gone from there. It's gone up 60, 70%.
Yeah.
That's going to be a massive shock to someone's income.
Yeah.
When they come out of those fixed interest rates.
I've got it coming.
Oh, you're one of those.
Yeah, I've got it coming in October. I looked at what the rates are yesterday, and it's double what I'm currently paying. In fact, it's more than double what I'm currently paying.
Yeah, well, that's what I'm saying.
And I'm I'm hoping that the interest rates doesn't go up anymore by the time we get there, and it probably will. But now I've got the question, like, do I go variable and sort of like look to see whether over the next 12 months it comes down? Do I lock in for a couple of years? I certainly won't be going for a 10-year mortgage, but a friend of mine did ask me what's the chance of them reducing mortgage rates in 12 months, and I said, well, they're pretty high. But if you ask me what's the chance they stick interest rates where they are and go higher, they're pretty high too. I mean, you literally cannot call it, because the UK economy particularly really is in a terrible, terrible place. The lowest growth in the G7. We're talking about GDP, which is down at 0. PMI suggests that GDP is going to be in negative territory. And yet inflation is gripped closer to 10% than it is 2. So how do you square that circle if you're the Bank of England? Do you batter the economy by raising interest rates? Or do you batter the economy by letting inflation remain where it is? Big problems, It's a big question right now of the best way to approach this kind of dichotomy that you have. That it's probably never happened in history, certainly not from the records that I've read. So yeah, very difficult, mate. And it does make decisions like what do you do with your mortgage very, very difficult. I mean, I'm likely to secure it at the price that I can afford, I suspect, and then not think about it for a while, rather than worrying about variables. But
I don't want to scare you in any way, shape, or form, and I don't think it'll happen. Right? In fact, it's off the cards. It can't happen again. When I bought my first property in when was it? 1980, 81, something like that.
Yeah.
Interest rates were, I think, 5.25%. That was my first mortgage.
Yeah.
And within 12 months, they were 18%.
Yeah.
Holy dooly, that was a shock to the Fortunately, I was earning a good quid at the time, so it didn't really matter too much. But wow.
Yeah. I mean, that's crazy, isn't it, mate?
That caused some mortgage stress, I can tell you.
Yeah.
Phil.
Yeah.
My good friend Phil. Need a round or flat bottom to get enough accumulation to get strength to the next run up. Is that on the NASDAQ, Phil? Is that what we're talking about, or just in general? Sorry, mate, I missed that earlier. We're having a chat, as you can tell. So, yeah, look, interesting times, and I don't know that we've seen, I haven't seen this scenario before. I really haven't. Since I've been trading anyway, maybe I did see it and wasn't aware of it. But, yeah, don't be frightened with all this. It cannot possibly go to 18%. We're going to have a change of monetary system before that happens.
Yeah,
it can't happen. There'll be carnage in the streets. It just won't happen. In general, yeah. Cheers for the try. Everything that comes down, everything that goes up has to have an accumulation or distribution scenario. There's no question about that. And where we are at the moment on the NASDAQ, we're accumulating to go to the next level. I agree with that, but I don't think we're going to have a distribution pattern. I think it's just going to go chunk, just like it has done the previous two times. I think it's just going to go bang.
This area here looks ever more interesting when you analyze it on the monthly. Lot clearer on the monthly. You can see these kind of levels that it might well be. This one might be a little bit in question where it is, but it's going to be somewhere there. But you can see, look, it's pretty tidy when you look on the monthly chart. How this is reacted. A nice bit of support there. It was support again. It came down. It went up. Support again, and it managed to close pretty much at those levels. Came up. There's support. As it comes down, it's become support again. This looks like the resistance zone. So this is an interesting point, I think, on the Nasdaq. And as I say, depending on what happens, probably today, but over the course of the next 2 weeks with employment data and CPI, could depend on whether we come down and get closer to this low again, or whether we do pop through and then stretch up to around about the 15,000 level again. So lots to take in there, mate. Interesting that cryptocurrencies are deciding the opposite. They're actually off their highs of their run in the crypto market. Bitcoin managed to get close to 24,000, now down under 23. So it's had around about a 4% move down again over the last week.
Can we have a look at that? Have you got a chart on that?
I haven't got a chart, but I've got the numbers, so I'll show you.
Yeah, I haven't got a chart in.
I can bring up a chart. I can bring up a chart, and I will share.
There's a good mate of mine whose initials shall remain, or whose name shall remain nameless, but with the initials Paul Bottrell, told me that was a very good technical chart to trade, and I've never kind of taken any notice of it.
Yeah, well, this is the Bitcoin chart, so I can't make it any bigger than that, unfortunately. But this is the chart. Let's have a look at the daily. It's actually quite clear on the weekly. If you look at Bitcoin, what's really happened here? What is happening here? There's a horizontal level which it has reacted at this horizontal level here.
Thinking I've got a bigger chart. I think. Yes, I do. I'll share my screen, mate. And make it bigger.
Yeah, sounds good.
But I'll get your commentary on it because I know nothing about it.
Well, Bitcoin is interesting because there's a lot of speculation that that there are also investors trying to get out of, or institutes, I should say, trying to get out of Bitcoin, and that's why we've had the rally we've had. There's still lots of questions about regulation and the like. There's no question, mate. Central banks, this is their biggest fear. This is the biggest enemy to central banks at this stage is looking for for something like Bitcoin to become adopted and to become adopted in a big way.
Which is why they're feverishly trying to make their own, right?
Which is one of the reasons they're trying to make their own. But the other sort of aspect of that is the question really then comes: do they just kill it? They can't kill the cryptocurrency market. It'd be impossible now, I think. But they can make it very, very difficult for the likes of Bitcoin to survive. And it may well be with something like Bitcoin that we are genuinely talking about it as a bit of a relic in the next 20 years, or it might be fully adopted. And I suppose depending on which side of the fence you sit on, depends on whether you think it's going to 100,000 and beyond, or whether you think it's going to zero.
Well, really nothing's changed for me. I've always, since I refused to buy Bitcoin back in when was it? Not 19, that's not true.
Maybe the 2000s.
2012, I think. Maybe 2013, when the bloke who taught me the bones of the slingshot system said to me, there's this thing just arrived called Bitcoin. And I said, oh, yeah, that's interesting. He said, I'm going to buy some. And I said, oh, okay, great. Let me know how it goes. Because I didn't even research it, look at it or anything like that. And it was like penny things at that time. It was,
Yeah.
I don't know, a couple of bucks or something. But I don't remember the price. More for me, of course. And those who made the killing made the killing. But I mark this right now as 28.30.
Yeah.
Before it disappears.
28.30. What? So you think it's going to be around then?
No, sorry. The next stop is around about 28,000 mark.
Yeah.
28 and a bit.
Yeah.
What happens after that, I've got no idea. But it was never about, since we've started talking about it for the last 3 or 4 years. It was always in my mind that yes, blockchain works. It's the future, etc., etc., etc. And how on earth are the central banks or the governments or whoever you think's in control of the monetary system, how are they ever going to let this take over? They're not, and they never were. So how they deal with that, how they crush it, do they let it exist? I don't know. Certainly blockchain technology is the future, the way I see it. How this is at 27,000 now or 22,000 now, whatever it is, how it ever got to 60,000 is beyond me. But I was listening to a broadcast yesterday or the day before, I can't remember. Our good friend Harry Dent, right? And he's got it at $1 million, potentially at $1 million, right? After, but not before it goes almost to zero, which is interesting.
Right.
I can give you the link to that if you want to have a look at it. And,
do you know what I mean? Where I think Bitcoin is incredibly interesting is that the guy that designed it, nobody knows who he is. And that's one reason that it might be very, very difficult to make it disappear. And this is the thing, I haven't really got an opinion on whether it goes to zero or whether it goes to $1 million. All I'd really do is think about the investor sentiment, over the course of the next time period to see whether it's worth trying to buy it or not. I think cryptocurrency and blockchain technology is amazing, and I think that will be around in some form or another. Institutes obviously are involved in this, whether they believe in it or whether they just also are speculating over the short term, I don't know. But as I say, where it is really interesting is that they kind of can't find how to break. Can they find how to break it? This is, they can regulate it as much as they like, but while we live in a free world of some description, it's going to be very difficult to make it disappear.
Yes, it is going to be very difficult to make it disappear, but they'll be working their filter valves out to try and achieve that, without a doubt.
Yeah, I mean, they need to find the guy that does it, and also the longer it sticks around, and the more it's adopted, the more dangerous it is to take it down. You've got the likes of Russia.
Yes.
Who can utilize the likes of Bitcoin for their nefarious means, and I don't mean to sound like a Russian basher, because yes, I'm against the invasion of Ukraine, but the West has got plenty of questions to answer themselves. So it's just the fact that Russia can go under the radar from what the West are doing. We'll probably get banned now, mate, but I've got no affiliation.
You're talking about the silent American terrorists.
Oh, just so much, mate. I mean, just so much, so much. Just I don't. The kind of days where you kind of believed the narrative that Hollywood managed to push at you, that the West are the good guys and everybody else is the bad guys, are long past. It's just the guys with their agenda. And the way that Hollywood can push the propaganda is a very creative way to do it, but I don't think people really buy into that anymore. So it's just
Bill's telling me to have sorry, mate. Phil's telling me to have a look at the Nasdaq on these indicators
Okay.
that he uses, and I'm trying to come to terms with them. Frankly, as you know, I've never used indicators in my life, so forgive me if I'm a little bit out of kilter here. But what Phil, I think, is suggesting is we've got the histogram's a little bit dodgy, but we're way above the center line, right?
Yeah.
The RSI is indecisive, but it's got a downward trend.
Yeah.
And the what's this thing called?
ADX?
The ADX,
Yeah.
has come off the highs. Hasn't turned. The negative hasn't turned up, which probably suggests it might be a little bit early. But
Yeah.
The indicators are saying, okay, this is ready to come down as well.
Yeah.
It's getting close.
Yeah.
So it's agreeing with our analysis, I think.
Yeah. Do you know the other thing?
How did I do, Phil? Did I get close to being right?
It's interesting about what indicators we use and what we analyze, because I look at the COT data as well. And we didn't get it reported this week. There was some issue, and I said to you about Monday. Still haven't sorted out the issue with the provider for the COT data. The third-party provider, they're struggling. The CFTC are struggling to get what they need. But last week's data did suggest that there was quite a big inflow of selling in Nasdaq contracts. So there's a few sort of aspects that suggest to me that the fundamentals need to line up, and that's the fight. I always look at COT seasonals fundamentals and then the chart. The COT and the seasonals are suggesting that we're getting close to a top. The fundamentals are probably suggest it enough now, but the market isn't biting. It's still saying, Jerome, you're wrong. You're definitely going to pivot. You're definitely going to be bringing interest rates down by the end of the year. And Fed speakers keep coming out saying, no, work to do. Data comes out, good jobs data, NFP and the like. That suggests work to do. But the market's going, no, that's wrong. This is going to change, and what we got right now is a bit of value. So really, until the numbers back themselves up, and whatever the number that the market is waiting for doesn't agree, and then they kind of wake up and say, okay, maybe they're not bluffing this time, then the Nasdaq stays where it is. But there's many things that are lining up for a short.
Yep. Okay, I think we're on the same. I better get rid of this before somebody accuses me of using indicators.
Yeah. We better push off anyway, mate. It's 10
yeah,
past.
it's getting there, isn't it? Okay.
Yeah.
All right. Last words. I suppose we'll go with the euro as always.
Oh, just realised, mate. I'm in Singapore next week, and
happy days.
After we meet, are we getting together on Sunday?
Sunday. What happened?
Super Bowl Sunday? Are we together on Super
Sunday,
Bowl?
right? It was Monday for me. So.
Yeah, Monday.
We'll do that. Yep.
Because after the Super Bowl, I've got to basically get on a plane, which means I won't be here for the morning show, the Monday show.
What a life you've got. That's okay. George will be in, so George and I will do the Monday show. That's fine.
Dandy.
What are we looking for on the euro? Retest. Yeah. Okay. So exactly what we said before. Looking for that breakout, pull back here, look to buy it. I think that would work. Nothing to do with the trades that we're in. Euro Kiwi, we've taken our first profit. As you know, stop loss have now been moved to a safe place. CAD Swiss, get the hell up there, for God's sake. This is looking exactly how I want it to look. However, it's looked exactly how I wanted it to look about 4 or 5 times in the last couple of weeks, and still won't set up for an entry. If it does today, best case scenario, price above here, close above the daily pivot would be ideal. Come back and retest that trade line. That's a buying opportunity for sure. Got to get some profit in the bank before the top of the range. But as I've said consistently, this has got a very, very, very amazing reward to risk available to it. That's the monthly chart I'm looking at, 78.17. If I can get in at 68.17. There's 1,000 pips up for grabs. So I'm very, very keen to do that. And I think it's entirely possible. Entirely possible. And there'll be many opportunities on the way up to actually add to that position. There's one there. There's another one there. There's another one there. I think this is excellent opportunity on CAD Swissy. So just need to time the entry, really. And here we go again. Another opportunity, perhaps. If it doesn't set up, it doesn't set up. But break above here, retest that. You can either enter there on a high risk, or you can enter here on a lower risk. That's what I'll be looking for. Don't think there's anything else. I said there's a whole bunch of things I'm looking at, but no setups at this point, apart from those that I've just described.
All right,
so
dude.
let's call it, mate.
Let's wrap it up. Thanks, Phil, for your participation, mate. Really appreciate that. And thank you to the guys in the room. Have a lovely weekend to everyone, and to you, mate. And I will see you Thursday. All things being equal, I should be in on Thursday for the show, because I'll be settled by then. I arrive on Tuesday, so I should be settled by Thursday.
All right, so I will chat with you just prior to kick-off in the Super Bowl on Monday morning, Sunday night. So that will be what? Early in the morning for you, right?
Yeah, it'd be about midnight till around about 4 in the morning. But my bus is at 5 to take me to the airport. So I may as well stay up. If I flag, I'll let you know. But I'm going to try and stay up, because but the Super Bowl is my favourite event of the year. Well, not my favourite event, my favourite sporting event of the year. So yeah, I've got to try and do it. And it's the Eagles and the Chiefs, mate. We're back to Mahomes. Mahomes is back in. So and I've got a bit of an uncomfortable feeling that the Eagles are going to turn them over, because they are tough. Mahomes is flair.
Defense,
right?
Mm.
Yeah. They are, if Mahomes gets it in the air, which is great, but they are gonna rush him a lot, and he's he's not 100%, but yeah, I think it's gonna be an interesting one, mate. But if I was having to have a wager, my heart would say the Chiefs, but my head would have to win out, and I'd have to say the Eagles.
All right, we'll have a conversation late or early on Monday morning for you. Sunday, nice. Whatever it is. I don't know, Sunday. Who cares? Have a wonderful weekend anyway, mate, and everyone else. Thank you for being our trading buddies. We will catch you. I'll catch you on Monday. I might be a bit weary, having watched the Super Bowl. Goes for about 13,000 hours. Bloody thing, what a game. Thank you, Tajul. I hope you enjoyed the show and got a little bit out of it. Have a wonderful weekend. We'll catch you next week. Bye-bye for now. See ya.